Newsom from DTN is our market analyst this week. The USDA's March crop report released Wednesday contained no major surprises. Internationally, the agency didn't make any adjustments in corn or soybean production in either Argentina or Brazil. So the focus on reports will now shift to March 31st, when the USDA is scheduled to release its calculations on quarterly grain stocks and prospective plantings. We talked with Darin at the Triumph of Ag Expo in Omaha's CenturyLink Center Wednesday afternoon about weather concerns this year, the strength of the dollar, and that day's supply and demand estimates.
Really, as March so often is, it was a very quiet report. All of the grains, as far as corn, soybeans, and corn, wheat, and grain sorghum, were all left unchanged as far as ending stocks go. Soybeans saw a 10 million bushel increase, again because USDA cut crush. Interestingly enough, even though we're running behind in all three, exports weren't changed at all. So I think all we're really doing here is kind of setting the table for another couple times down the road. I think we're going to wait and see what happens with the quarterly stocks numbers at the end of the month, and then start to see some more adjustments come. But it was a very quiet report as far as the domestic numbers go. The real interest was that in all three, again, ending stocks, global ending stocks were decreased. We saw increased demand for both corn and soybeans, and just some slight adjustments in wheat that brought that down as well. So I think the real interest was over in the world numbers.
Surprised that there was no increase in either Argentina or Brazil in either corn and soybeans?
I think it was a little bit of a surprise, because the talk going in was that we could actually see Brazilian production go up over 100 million metric tons and Argentina get up maybe to 59 million metric tons. But we left it alone. At least USDA decided to leave it alone this time around, again, leaving it open for another month down the road, or possibly taking more time to evaluate what potential damage may have been done, say in January when there was a drought going on in that part of the world, or weather problems going on in that part of the world, maybe reducing. But still, the general consensus still seems to be that Brazilian production is over 100 million metric tons.
So let's talk about some reasons or some possibilities for hope here for the farmer. You said one of the things that they could look at immediately is what the Fed does. Yep. Tell me why what the Fed does is so important.
I think next week's meeting, or this coming week's meeting by the Federal Reserve, is very important to the grain markets. We've seen the US dollar go up, and it's been very strong, and it's stayed very strong for quite some time. What we really need to see happen from a grain point of view, from an export point of view, is for the dollar to start to come back down. And really the only way to do that is for the Fed to come out and say they're not going to move again in 2016 on interest rates. Do I think they're going to lower rates? No, I don't. But if they just don't do the 4 increases that they were talking about in December, then I think it's possible that could be enough to finally start putting some pressure on the dollar, maybe start to increase our export possibilities a bit.
One of the other hopes that you talked about was maybe some weather concerns. At what level would a weather concern help the market?
Well, most notably, initially, we're going to have to, it would probably come in the form of some sort of spring planting delay. Get some real wet weather in either the eastern corn belt, western corn belt. This could help the new crop market. And if we see a strong enough rally, say get 20, 30 cents in corn, 30, 40, maybe even, I'll stretch it out to 50 cents, whatever, in soybeans, that could be enough to pull the old crop market up with it. The problem with any rally in the old crop market is that there's a lot of grain yet to be sold. There's a lot of grain still being held. And so the minute we start to see those markets move, that's going to start coming to town. Those bin doors are finally going to start to open, because everyone in the market knows that grain has to get moved before the next harvest.
Is the huge associated benefit with both of those, exports and weather, is it not necessarily the event, but perhaps the short covering that comes along with it?
Yeah, to me, that's probably the key. And right now we've got the non-commercial or the investment side holding very large net short. In other words, they've sold more contracts than they've bought positions in all three grains. And fundamentally, there's no reason for them to cover. But if we get some sort of series of headlines, say the dollar, or say the weather, whatever it might be, political situation in Brazil, it could lead to a round of short covering, which could be the spark that really starts to set these markets in motion, push them higher short term, probably more than anything else.
What do you see in the chart as far as where prices could go over the next few weeks?
I was looking more at new crop, and the move that we saw in November beans today was pretty impressive. but yet it had no follow through once the reports come out. So I still think if we look at the new crop markets, that we could see, soybeans get up into the 920, 930 range, and in corn maybe approach that 410, 420. As far as the cash markets, we've got corn down around 385, 390 as far as the national average cash price. If we can tack 20, 30 cents onto that, that might be about the best we can do. Maybe get it up close to 4, maybe a little over 4. And then soybeans, if we could get that same 30 to 40 cent rally in cash beans, I think we're going to see a lot of people moving because basis is going to start to weaken.
If you think about long term in both corn and soybeans, do you think that you get through this year, if there's not a major weather problem, we're going to be in the same position next year talking about really difficult margins with expected big production?
Yeah, if we get through this year without a big weather scare and we produce to the level that we think that's being talked about at this point, possibly the 4th year in a row of record large numbers, we're going to be struggling at the same time next year. But the one difference could be is that we could be looking at a change in the long-term weather patterns. So where we might be able to get through 2016 without having a huge weather scare, by the time we get to 2017, the long-term weather may have changed to the point where it becomes more of an issue, and that could be the catalyst, or that could be the reason why we actually start moving the markets higher.